Welcome to the daily insights that matter. Now, over the past 3 years, the global economy has been through a series of significant challenges. Now, we witnessed multiple waves of the COVID-19 pandemic, geopolitical tensions, tightening of monetary policies, and even a recent banking crisis. Now, it's safe to say that it has been quite a roller coaster ride for the world economy. Now, despite all of these challenges, the Indian benchmark indices have been scaling new highs. Yesterday, the 30-share BSE Sensex has made a remarkable leap, gaining 670.31 points or 1.02%, reaching its highest ever intraday level of 66,064.21. Similarly, the 50-share NSE Nifty saw an increase of 29.45 points or 0.15%, closing at 19,413.75. Now, during the day, it surged to a high of 182.7 points or 0.94%, hitting its all-time high level of 19,567. Now, let's understand the factors that drove this rally. The first is the positive global clues. Now, it's important to note that global market sentiment also influences the Indian equity markets, highlighting the interconnectedness of the global and the domestic market conditions. Now, positive trends in global markets have also contributed to the gains in the domestic market. The US inflation data was released yesterday, and it is finally starting to catch a break. After months of high inflation rates, US inflation has come at just mere 3%. Prior to 2022, the consumer price index hadn't gained more than 8.3% on a year-over-year basis in any month since 1982. However, post-COVID-19, supply chain disruptions, pent-up consumer demand, and the tight labor market drove prices sharply higher. This led to the inflation in the US peaking at 9.1%. Now, with 3%, we see that the headline inflation has been moving closer to the Fed's 2% target after peaking at more than 9% last year. Now, the lower than expected US inflation reading in the month of June got investors looking at the months ahead with optimism, hoping once again for the end of the Fed's rate hike cycle. It seems that the days of aggressive monetary policy will soon be over, and the rally in the US and other global stocks can be attributed to this very sentiment. Second is the moderating CPI inflation data and the strong IIP growth. Now, despite a rise in the June CPI or the consumer price inflation to 4.81%, it was anticipated that due to higher prices of vegetables, meat, and milk. Now, on the other hand, the index for industrial production for the month of May showed a growth of 5.2%, indicating a strong momentum in the economy. Now, in the month of April, the industrial growth was initially reported at 4.2% but was later revised to 4.5%, while it reached 19.7% in the month of May 2022. Third is the foreign investor flows. Now, after being net sellers in the past 2 financial years, FIIs have shown increased interest in the Indian equities since March 2023. So far in 2023, they have pumped in around 1.01 lakh crores in the Indian equities with inflows of 25,009 crores in July so far, after 47,148 crores in the month of June. Now, they have remained net buyers of Indian equities for the 5th straight month now. Now, all of these factors led to the Indian benchmark indices to new heights. Now, as the Sensex surged to new heights, it symbolized not just a triumph of numbers, but also a testament to India's unwavering economic resilience and the relentless pursuit of progress. With each passing milestone, the Indian stock market gives investors promises of untapped potential and unprecedented opportunities. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com